Imagine discovering a secret vault that could save you a substantial sum every year. Sounds intriguing, doesn't it? Well, that vault exists, and it's called income tax planning. Every year, countless individuals pay more taxes than necessary, missing out on potential savings. Take, for example, a salaried person earning 1 million rupee annually. With effective income tax planning, they can utilize deductions such as Section 80C, health insurance premiums under Section 80D, and home loan interest under Section 24, potentially saving a significant portion of their taxable income. Could you be one of them? Dive into the world of income tax, a necessary contribution to society's well-being, yet a complex puzzle for many. Let's break down the income tax for someone earning 1 million rupee to illustrate this complexity. Assuming a basic exemption of 250,000 rupee, the first 250,000 is tax-free. The next 250,000 rupee is taxed at 10%, resulting in a tax of 25,000 rupee. The subsequent 500,000 rupee is taxed at 20%, adding another 100,000 rupee to the tax bill. This brings the total tax liability to 125,000 rupee before considering potential deductions or exemptions. Why do you think it's crucial to understand the mechanics of income tax? Let's explore tax-saving investments using the example of a salaried individual earning 1 million rupee. Imagine tools like public provident funds, equity-linked savings schemes, and fixed deposits. These aren't just ways to save money, they're strategic options to reduce your taxable income under Section 80C. By utilizing these instruments, our example person could significantly lower their taxable base after considering the standard deduction and exemptions provided by Section 80C. Now let's break down their revised taxable income and compute the potential tax savings given the current tax slabs. How could these choices reshape your financial future? Now let's delve into insurance. When you pay premiums for life and health insurance earning an income of 1 million rupee, it's not merely an expense but a wise strategy to reduce your tax liability. What insurance policies are you invested in, and how effectively are you using them to maximize your tax benefits? Switching gears to the goods and services tax, or GST, which affects almost every transaction you make. For someone earning a salary of 1 million rupee, understanding GST is essential for managing overall expenses effectively. Let's break down how GST impacts the daily purchases of an individual with this income level. For business owners, the landscape shifts slightly. A vast array of business expenses can lower your taxable income. For instance, imagine a business owner who earns 1 million rupee. If they spend 300,000 rupee on rent, 100,000 rupee on employee salaries, 50,000 rupee on utilities, and 50,000 rupee on marketing, these expenses totaling 500,000 rupee can be deducted, effectively reducing their taxable income to 500,000 rupee. What other expenses might qualify as deductible for a business? When comparing tax planning between a salaried individual and a business owner, both earning 1 million rupee, the differences become clear. Salaried individuals have their taxes automatically deducted at source, streamlining the process but offering less control over tax-saving strategies. Business owners, conversely, benefit from greater flexibility in managing their finances, allowing them to strategically plan for deductions and potentially lower their taxable income. How do these scenarios impact your approach to tax planning? Remember, tax planning is not a sprint but a marathon, especially for those earning significant incomes such as 1 million rupee. It demands diligence and a strategic approach, focusing on long-term benefits. For individuals in this income bracket, exploring investment options under Sections 80C and 80D can substantially reduce taxable income. Additionally, considering LSS funds not only aids in tax saving, but also helps in wealth accumulation over the years. Before we conclude, here's something to consider. Many of our viewers love our content, but are yet to subscribe. If you found these tax tips valuable, particularly for managing an income of 1 million rupee, subscribing will ensure you continue to receive expert advice and strategies to maximize your earnings. Don't miss out on optimizing your financial health. As we wrap up, consider implementing the tax strategies we discussed to effectively manage and optimize your financial planning, especially significant if your salary is 1 million rupee. Engage with us by liking, sharing, and commenting to help us generate more valuable content. Don't forget to subscribe, hit the bell icon to stay updated on our future videos. Thank you for watching and continue to enhance your financial future. Welcome to our detailed calculation breakdown. where we'll dive into the numbers to show you exactly how the tax strategies we discussed can benefit you. Let's start with a salaried individual earning 1 million rupee. First, consider the standard deduction of 50,000 rupee, reducing the taxable income to 950,000 rupee. By investing 150,000 rupee in an ELSS mutual fund, you can further reduce your taxable income to 800,000 rupee under Section 80C. Now let's apply the tax rates. 5% on the first 250,000 rupee is zero tax due to the basic exemption limit. The next 250,000 rupee incurs a 5% tax, totaling 12,500 rupee. The remaining 300,000 rupee is taxed at 20%, adding 60,000 rupee to your tax bill. So the total tax for our salaried example is 72,500 rupee, but with the tax strategies applied, you save a significant amount compared to the standard tax without deductions. Moving on to a business professional, let's assume a net income of 1 million rupee. By claiming 200,000 rupee for business expenses and using the same 150,000 rupee investment deduction, the taxable income reduces to 650,000 rupee. The tax calculation follows the same slabs, resulting in even greater savings due to the higher amount of deductible expenses. These examples show that with the right planning and knowledge of tax laws, both salaried individuals and business professionals can significantly reduce their tax liabilities and enhance their financial health. Remember, every financial decision should be tailored to your personal circumstances, and consulting with a tax professional is always recommended for optimal results.